We are halfway point of the year, and the Nigerian exchange group is up a healthy 24% since the year started. Still, some bearish sentiment has dotted the market in more than a few trading sessions. The exchange began the month of June down 1.24%, the largest single-day loss since December 8th of 2021. What does that tell us about as we look forward to the second half of 2022 at the end of the current month? Joining me to discuss this further is Ajibola Akamo, Investment Analyst with Nairametrics. Ajibola, good morning. Welcome to the show.
Good morning. How you doing?
Yeah, good to have you. I'm sure when the market is up and is at a very big rally, it makes analysts like yourself a little bit very upbeat about how the market is performing. So year to date, 24%. In the month of May, the NGX was better by 8%. So describe the first 5 months of the year for me. We are starting the 6 months right now, which was yesterday. Give me just a very sneak preview, a review of how far we've traveled this year.
I mean, it's been very good the first 5 months, and we're talking about above 20% ASI gain year to date, which is very good compared to other developed markets that are actually in the red. In fact, the Nasdaq is down 20%, ignoring a bear market, and Nigeria's market is up over 20%. That's actually very impressive, and it's on the back of very good earning reports by the companies listed on the exchange. And aside from that, we're even seeing increase in local participation in the market. We're seeing local, which is basically Nigerians buying Nigerian stocks, right? And we're seeing a lot of that going on in the market, especially in the last report by the NGX, where you saw local participation accounting for 86% of the transactions going on in the market. And we saw domestic retail investors, which is basically you and I, and not institutions, basically increased their level of transactions in the market. They accounted for, I think, approximately 68 billion worth of the transactions in the market, while also the institutional player did increase to about 110 billion. It just shows that the general morale for the market, or the general participation in the market, is very good. And I would say the last 5 months have been quite impressive. Thank you.
Give me an idea about what would you attribute the healthy returns that we've seen so far on the index? Is anything as part of the trading theme for the first 5 months of the year?
Okay, what I would say is a lot of what we're seeing, basically, I would say it's cost transfer to the final consumer. Because of the high inflationary environment we're in, inflation of 16% in Nigeria, it's causing a situation whereby the prices of goods and services and the cost of sale of these companies listed on the exchange are going up. And so these people, or the companies listed, are basically trying to transfer that cost by increasing the prices of their goods and services to the consumers or the people that patronize them. And that has caused that improved earnings that we're seeing today, and ultimately it's bringing out what's the right word here, bringing out this improved performance and this improved participation. We're just basically, what we're seeing now is an adjustment to the current inflationary environment in the earnings of these companies that we're seeing. For example, you can see the cement industry. We saw that their revenues went up and their profit after tax went up, but if we're looking at in terms of cement sales, that was actually down. That shows clearly that it's just a transfer cost of the cost of goods and services that these companies are incurring. They're transferring that cost back to the final consumer, and I will attribute why we're seeing this astronomical returns in the market to that.
Interesting. The month of June started yesterday on a bearish note, and we saw some losses. We saw some losses last week and the week before, just mildly as it were. Again, was that due to end of month portfolio adjustment? What would you attribute it as an investment analyst?
Well, you could say that end of month portfolio adjustment, of course, would play a factor, but also profit taking. And profit taking as a result of the CBN's increase of the monetary policy rate, which is the interest rate in the market. For the first time since September 2020, the CBN actually increased the monetary policy rate, or the interest rate, to 13% from 11.5%. It just means that the access to what I would say expensive funds, or access to funds that was already expensive and is now even more expensive. That's just basically what's happening. And because the access to funds is now more expensive than ever before, then a lot of people are taking it back. So it's exactly the same situation we're seeing in the US market. when the Federal Reserve hiked the interest rate, we saw tech stocks, even the cryptocurrency markets, crash significantly. And that is the precipice of what is happening now in the Nigerian market. Although as soon as that news was announced, we went into 3 days of rallies, with Airtel adding about 1.12 trillion in market capitalization into the market. But now we're seeing a slowdown. It just means that I think a lot of these portfolio managers, investors are reevaluating and trying to understand the impact of this increase in the monetary policy rate. And then they're seeing that, okay, this is actually significant and this is going to pose a problem in the long run. And then they're now taking a backseat. I think that's why we're seeing that in the market today.
Okay, let's chat to some sectors. Let's start with breweries. The numbers came in very nicely, as it were, for full year for Q1 for Guinness, for Nigerian breweries, and his other names such as Guinness and a few others. Then the price were a little bit hot at some point. They were a little bit skittish as we move on to later on the take. What I've been asking, what are you folks, what's everybody drinking? What's this drive for the brewery sector? You're smiling. I don't have an idea what you drink, but you can tell me that after the show. No disclosure here yet.
Although I don't drink beer, right? But at the end of the day, I would say, with more clubs coming back to town, with more beer parlors opening up, we're going to see more demand for breweries in general. And even aside from that, what we're seeing now, looking at the performance in the month of May, coming in at 4th and 5th place for the most gainers was Champion Breweries and International Breweries. Champion Breweries posted, I think, about 56% return, and International Breweries posted about 54% return. So we're seeing a lot of, people buying more beer, and it shows in their profitability. We saw Guinness performance in Q1. We're seeing International Breweries performance in Q1. We're seeing Champion Breweries. Everything has been very, very impressive so far. But however, I'm currently flat on the industry. Reason being that, like you said, the prices have already gone up significantly. And because of this interest rate problem and because of the current inflationary environment, I think we're going to start seeing a significant level of pullback in the markets. So I think I'll just be flat on the breweries industry right now.
Joints, whatever, all across the street corners and all that. It looks like that's the new business in town. It looks like everybody's just trying to get into something. Consumption. If you look at consumer goods outside the brewery sector, in terms of whether you talk about Unilever, PLC, you talk about other big names such as PZ Cuisance, one of the few indexes that closed positives to start the month. I'm asking, what's your view on the consumer goods stocks? What is happening there with these big names, including flour mills?
All right. So the first thing is, it's the same thing with the brewery sector, right? So we're seeing a lot of consumer goods are basically goods that you can't do without, right? So you always want to buy them. You always need them every time of day. So there'll always be demand for them. And what we're seeing again, transfer of the cost of sale down to the final consumer, which is you and I. We're seeing that, and that's why we're seeing these improved results. We saw flour mills. Flour mills posted, I think, about 28 billion profit after tax. The recent result that they just released, that full year result, and that's quite impressive from farmers. And I think for the consumer goods sector, again, be flat on that. Like I said, I believe there's going to be some significant level of profit taking in the market. So I'm definitely flat on consumer goods sector.
Let's talk about banking. FBN Holdings just came in with a very robust 2021, 2022 Q1. We had a very extensive interview 2 days ago with the CEO of First Bank, which is a major, the biggest, the elephant in the room for FBN Holdings. And then you find others like United Capital coming in with a very robust full year. And then you find a few other names such as Jitco and Access coming through with some of the first set of earnings after they've gone holdco. So how would you, what's your assessment of the banking stocks on the NGX? You think these folks still hold the ace in terms of liquidity, in terms of returns, in terms of being the growth stock that everybody wants to hold?
I'm definitely very bullish on banking stocks. Reason why I'm bullish is because the MPC rate that was increased just means that the cost of borrowing has gone higher. So banks are now able to charge higher interest rate on loans that they're giving out. So definitely bullish. Like you said, First Bank's results were very, very impressive, especially this Q1. They posted 100% gain on profit after tax to 32.4 billion. And I mean, for the banking stocks, especially because of the fact that they're known for paying very, very good dividend. We're talking about Zenith Bank, GT, and the likes. I'm very, very bullish on banking stocks. I think a lot of people should be focused on the banking sector right now, as more money should be coming their way, especially because of this new interest rate hike by the CBN.
Great. Ajibola Akamo from Nairametrics. Thank you so much for talking to us this morning here on Global Business Report.